If you always find yourself in constant loss or negative P&L, this strategy is designed for you. Hello trader, welcome back. So in this lesson, I'll be discussing how to cancel out a losing trade by hedging. Here is an example of when I took a trade and I was on a huge loss of $73.4. And then if you look at the move here, it was from $2, which was my entry here, to 1.91. If you were a new trader, what could you have done? You might have closed this trade and then ended up in a loss. A good example of these two here is Pixel here. Here, I also canceled out my loss and I also made some profit after canceling out my loss. By the end of this tutorial, you're going to learn the different scenarios when you could cancel out or when you should cancel out your losses instead of waiting for the market to recover. To understand what is going on here, let me use BNB for example. Let's say I bought 1000 BNB at the price of $250 and BNB moved to 240. At 240, I was making a loss of $2,000. For me to cancel out the $2,000 loss by hedging, I need to buy. This is the principle. I need to buy short. The reason I'm buying short here is because I took long. If it was short that I took as the first trade, that means the subsequent trade will be long. But here I took long. So now I have to buy short. The most important thing here is that the total size of the coin I'm buying should be higher in amount more than the previous position I opened. Here is it. The previous long position I bought had 1000 BNB. That means if I want to cancel out my loss here, I need to open something above 1000 BNB. The best practice is to open a position twice higher than the previous position. Here, the 2000 BNB is twice higher than the 1000 BNB. Meaning, if this coin keeps on dropping, the long will still be on loss, but the new position of the shorts here would give me more profit to cover my losses. This is how my new position would be. Let's say I now bought the 2000 BNB at the price of 240 instead of 250 and it moves to 220. It means my profit here will be 8,000 and this is my previous position that is still in loss, which I bought at $250. When it moved to 220 at the same price as the new position I took, you will see that my total loss here will be 6,000 and then my total profit here of the new position will be 8,000, which will give me a total gain of 2,000. Now, when should you cancel out a losing trade by hedging? There are many scenarios, but the most important three scenarios are when there is a sudden dump in BTC. Because most of the times, these ways they could just choose to dump BTC and then it will automatically crash you. Not just BTC, even you are trading gold on Forex. When there is a sudden dump, you need to hedge. And then, when you have a clear sense of where the market is heading to, it's easy for you to be able to hedge in order to cancel out your loss or a sudden change of trend. I'm going to be showing you guys these examples using Pixel USDT and AI USDT. Here on our screen, if you look at this position I took, Pixel USDT, you could see that I successfully canceled out the long position loss here with the short position here. And then the size of this Pixel is twice bigger than the long position I opened. My entry point here for the long was at 0.6242. Let's look at the graph to see what actually transpired. This is what happened with Pixel. First of all, I identified a valid support level here where I knew that even if this coin comes back, it's not going to break anyhow. Then at this region, I know that the likelihood of it breaking is possible, but we saw something like a liquidity grab here and a double bottom here with an inverted hammer here with these only and something like a bullish engulfing. I actually took a trade. I think I placed my entry somewhere here at 0.62 something. This came down, picked my trade, and then was going up peacefully. And the crypto was just pumping as expected. All of a sudden, I just noticed a huge candlestick here. Immediately, I took a shot. You could see what happened here. that was big profit. I made it from here to 6 points to 7 points, from 0.62 to 0.72. I forgot to close the trade because mine was aiming for a bigger profit somewhere here or even here, but it didn't even get to this point. Now this is where I decided to take a shot to cover my loss. You see, that was how we broke that region. So if I didn't hedge at this moment, what did you think could have happened to me? If I didn't hedge, that means I would have been liquidated. So what happened here? There was a sudden change of trend. When I saw this bearish engulfing here and this too, I was like, man, these people are going to kill it. They're not going up to, retest. They're going down to, get me fucked up. AIUSDT is another good example where I cancelled out my loss, just like what happened in the previous trade. Nothing else, a sudden change of trend, and then once I pinpoint the direction, I decided to take short. You can see that sudden long candlestick that engulfed everything that happened here. At that point, man, I had to go for cover. I had to cover for myself, man. I had to hedge immediately and then hedge with a huge number because I was in profit. I was expecting the market to continue. That is one thing, that there's always this thing that no trader escapes loss, and that is the truth. The most important thing is knowing how to pull yourself out. Remember the rules. For you to cancel out loss, there must be a huge change in trend, and then you must hedge in terms of the size of coin must always be greater than your losing trade. The size of coin of the opposite trade must always be greater than your losing trade, so that the more the market dumps, the greater the chances that you're going to recover your losses. And also, why do we do that? The reason why we do that is so that your liquidation will be very far. If I decided to close just the 73, let's say I decided to close it when it was just $30 or $40, and then if I hedge or just take a short, my liquidation will be very close and it will increase my fear. So that is why we just hedge and leave everything to play out. Up next, I'll be discussing how to reduce your liquidation level using hedge mode.